Welcome traders to this new market review of week 13 for Nasdaq futures. In last week's market game plan, I discussed the plan for the week and what I was expecting from price in the charts. So let's take a look at that video. First target for the week is 20,147. I'll write it down here so you can keep me accountable for it. Let the buy side target. Oh. Put it like this. And a sell side target, which is 19,139.25. Yes, okay, put it over here. So yeah, this is what I expect for this week. I expect the high of the week to be formed on Monday, Tuesday or Wednesday. The 70% chance it is created prior to Tuesday's London Open. Then we will have midweek. We have some continuation towards the downside with our first objective around 19,600. These relative equal lows. Then 19,550, which are these relative equal lows. And the final target for the week for me will be 19,139.25. If I'm wrong, then I want to see price close above this weekly SIBI over here and use it as a discount rate to send price higher. But for now I am bearish and I expect these lows to be taken throughout the week. Yes, with a crystal ball. It's almost like you can predict what's going to happen. Even before the trading week starts, you can have a rough idea of how the weekly profile will unfold for the following week. And yeah, not to brag or something, but this is exactly like I explained in my video. And well, let's dive into what happened. So we left these relative equal highs, previous week's high on Wednesday last week, and on Thursday a previous day high. With relative equal highs. The right one is lower than the left one, and we opened up with a new week opening gap, premium new week opening gap. We actually took the first buy side target. Note the accumulation. Look at the bodies over here. Reaction with the weekly SIBI we were monitoring throughout the previous weeks. And from there we started expanding on Monday, leaving this tiny portion of the weekly SIBI open. So you know it's likely to fill the gap. And on Tuesday that's exactly what happened. We opened over here, manipulation up. Real manipulation into that SIBI consequent encroachment on the weekly and continuation towards the upside to fill the gap. Small retracement, and at the end of the day, Asia session on Tuesday, we took out the buy side target above this short-term high over here. On Wednesday, we pretty much consolidated above that weekly SIBI, and from there expansion towards the midpoint, consequent encroachment. Note the shorting opportunity into that SIBI low, into these relative equal highs. And on Thursday, classic sell day, manipulation up, sell side delivery. On Friday, creating the high of day in London. It happens approximately about 35% of the times. 50% it's inside the New York kill zone that the higher of day or low of day is formed. According to my own study, do your own research. But on Friday, 8:30 a.m. news took out these relative equal highs. Expansion towards the downside. low risk sell over here, and we traded pretty much through that daily SIBI from this candle's low to this candle's high. And on Friday, huge expansion. Note that Thursday was a pretty small range day, and Friday, the very next day, boom, into the relative equal lows around 19,600 we were expecting price to trade in, and into the 19,550 level over here, also relative equal lows. So yeah, we didn't take out these relative equal lows over here, which is the intra-month, the intra-month low over here for March. I think we may take out these relative equal lows the very next week or the very next weeks. So yeah, let's find out. On the daily, beautiful sell side delivery into this busy. I am expecting this busy to be flipped for a bearish inversion fair value gap. That's why it's annotated like this. So close below, tap it back, and trade even lower into these relative equal lows from September 2024, this low from August 2024, and even longer ago, April, almost a year ago, April 2024. Yeah, these are my sell side targets for the coming weeks. So bearish bias. So we opened the week with a premium new week opening gap. Traded from Sunday into pre-market to the upside. Waited for 9:30 a.m. opening bell. And then this was what happened. Okay, so we had a premium opening range gap of 300.75 handles, which is huge because it's higher than 120 handles. That's why I was expecting continuation towards the upside. We didn't trade into the SIBI consequent encroachment, as you can see. And from there, small manipulation into these relative equal lows over here. Displacement towards the upside. First presentation over here, which is a SIBI. It turned into a bullish inversion fair value gap. Note the reaction. Over here you had a silver bullet. And buy side delivery was next. Okay, maybe I can leave the high time frame annotations for what it is. So low between 9:30 a.m. and 16 p.m. is formed in the first hour, and the high in the last hour, which is typical. According to my study, it happens around 50 to 60% of the time. But it can deviate. The high of day can also form anywhere. It can form at 10 a.m., it can form at 11 a.m., even early in the afternoon, but most of the cases in the last hour of trading. So between 11:30 and 13:30 we had a huge retracement into these relative equal lows. Waited for 2 p.m. That's this down close candle over here, manipulated towards the downside, where the low of the PM session was formed, and note the beautiful run that took place after that. Okay, for Tuesday, you actually think it's the same chart as we just discussed, but it's a totally different chart, and there you can see the algorithmic patterns that IBDA leaves for you to take. So, low of the regular trading hours is formed inside the first hour of trading. Between 11:30 and 13:30, huge retracement took place. 2 p.m. candle is this candle over here, small manipulation, and that's where the PM trend started. Inception was formed 6 minutes past 2 p.m. and terminus was formed 8 minutes past 4. So yeah, again, we had a pretty small premium opening range gap of 30.5 handles, so it's pretty small actually. We had pretty messy start of the AM session due to the fact that we had news after 10 a.m. Yet I waited for that right moment, and over here 10 a.m. came along. We took we took buy side first, traded into the opening range gap low. Note that the consequent encroachment was reached inside the first minute of trading, and from there you could have captured a beautiful long opportunity, and during the PM session you could have done the same. Let's go to Wednesday's price action. For Wednesday, you can see that we had 8:30 a.m. news, which is over here. The green candle, that's where manipulation started, and a beautiful run after that. During the opening bell, we had a discount opening range gap of, let me see, 63.75 handles. Discount opening range gap again, so opening range gap consequent encroachment was above us. Approximately 31 handles from opening range gap low, which is the opening price at Wednesday. So traded towards opening range gap consequent encroachment and was reached 8 minutes after the opening bell. And you can do two things. We either flip it for support and continue towards opening range gap high and maybe even higher, or you can reject it and trade to the other side, so to the sell side, and note what happened. This could have been a trade on the 15-second chart. It was easy to cover risk and cover your stop loss, so you could have used a tiny stop loss with a larger position, and you could have been done within within 8 minutes. But the real move took place after that towards the sell side, the other way around. Note the displacement, trade back into the lower quadrant of the opening range gap, and note the huge reaction. Let me measure from this candle's high to this candle's low, which is reasonable. 227.5 handles within 48 minutes. That's pretty decent, right? So the previous examples were bullish examples. Now we have a bearish example. So 8:30 manipulation, opening bell over here. We create the high between 9:30 a.m. and 16 p.m. in the first hour of trading. A big retracement didn't really take place. Yeah, maybe this one, but we even failed to take out the closest liquidity pool, so it was really weak, and the low of day was formed inside the last hour of trading, 7 minutes past 3 p.m. Yeah. Note the reaction from the first presentation, which was this Sibi over here. Could have used the bigger busy over here as well. Beautiful shorting opportunity. On Thursday we had a smaller range, as you can see over here. So I've annotated these relative equal highs formed, the Asia highs annotated, and the London highs are incorporated as well. So pre-market we left these relative equal lows over here. We actually took them prior to the opening bell, which is unusual because it's normally or usually after 9:30 a.m. opening bell. But for now, took out the relative equal lows around 20,020. Note within the second minute, we already managed to trade into opening range gap consequent encroachment and rejected from there. Could have captured a short over here. Don't be mistaken. Okay, don't. Talking about 133 handles, which is pretty decent. But let's say you capture it over here. It's still plus 100 handles, and it's even it's inside the high time frame bias, which is bearish. But the real move took place towards the buy side, because we still left these relative equal highs intact. So 9:30 we open, trade into consequent encroachment of the opening range gap. 1 minute after it, forming the sell side imbalance, buy side inefficiency over here. Traded one more time towards the sell side, traded up, rejected the first presentation, the SIBI, but formed a higher low, expansion up, accumulation inside the first presentation, consequent encroachment, and from there, okay, don't take the low, but take the consequent encroachment, for example. Stop loss below this busy candle over here. Okay, from your fill towards the high, just a little bit longer than 1 hour, actually 1 hour and 4 minutes, a beautiful plus 5R trade. After that, 11 a.m. came along, we created the macro over here, we created the high 4 minutes prior to 11 a.m. Between 11:30 and 13:30 p.m. you can expect a retracement, which happened over here. Return back to the first presentation and note what happened during the PM session. So we didn't trade outside the first presentation, just slightly outside of the opening range gap. But the body stayed inside the first presentation, and look what happened over here. 2 p.m. What do we know about 2 p.m? That is the start of the PM trend. And note what happened. Pretty much around first presentation, consequent encroachment, price starts spooling into opening range gap, consequent encroachment, into the upper quadrant. Just fell short of closing in the opening range gap, which is high suspect. But huge retracement just below this low, so all the stops below were cleared, and inside 15 p.m. macro, actually exactly at 15 p.m. boom, final push to close the opening range gap, and that's where we rejected and traded just below the first presentation into these relative equal lows over here. Yeah, just a beautiful day of price action. But last is best, right? Let's go to Friday's price action. On Friday, during London session, Asia left these high suspect relative equal highs. We hovered around the premium wick, consequent encroachment on the weekly chart. Manipulation starting at 2 a.m. Taking the relative equal highs over here. First displacement, and over here you could have captured a short into these relative equal lows over here. If you measure from this candle's high to this candle's low, we can measure a symmetrical swing, which comes around at 19,920. And that's almost where the low is formed, inside the 3 a.m. macro. So even within 1 hour of time, a beautiful plus 150 handle move. Yeah, pretty insane. Let's add the -2 as well. And terminus was reached 4 a.m. That's where price reversed. I think maybe if we take the -2.5, yeah, it gave a beautiful estimation of where price was able to stop. Okay, pre-market, price left these relative equal highs over here. Did we actually have 8:30 a.m. news? Yes, we had, and 10 a.m. So you actually can see it from the candles as well, but it's good to confirm. 8:30 a.m. fake run, real run from 9 a.m. delivery into these relative equal highs. That's where the high is created, displays towards the downside, change in market structure, retracement into the discount opening range gap of 91.5 handles. So traded into opening range gap, lower quadrant, but fell short of trading into the opening range gap consequent encroachment. What are these two bodies telling you? Price is weak. That's your first sign that price may continue into the direction of the higher time frame, which is again bearish. So we're looking for shorts and we're waiting for something like this to unfold, because if you are looking for shorts, then you know that the first hour of trading between 9:30 a.m. and 10:30 a.m. the high of day or low of day is likely to form. So inside the first hour of trading. So that's what you're hunting. You are hunting these things to occur. So 9:30 comes along. We clear these lows first. Trade into opening range gap, lower quadrant, reject, displacement towards the downside. One more time up, fell short, failure swing. We didn't take this high over here. Boom, displacement. First presentation over here. Note, closing below, tapping it back just outside the trade into this balanced price range, into this up close candle, which is a bearish order block. Reject, trade towards the downside. So we have a large wick over here. Could have measured it as well. Note it's 10 a.m. candle. We had a medium impact news driver. So consequent. Yes, I have this one. 814. No, come on. Yes, there we have it. Okay, close below the large wick over here, below the consequent encroachment. Boom. What happens next? This candle's open. This candle opens over here. We trade up, but fall short of trading into the consequent encroachment. It's actually trading inside the 0.25 level. Okay, reverse it for now. Okay, so we close below premium wick consequent encroachment, trade up but fell short of trading into that, so that shows weakness. Boom, trading into the SIBI on the daily chart, on the high time frame, and look what happens next. Many silver bullet examples. Silver bullet 1. Let me see. Silver bullet 2 didn't got filled over here. Silver bullet 3. Yeah, many examples. So PM session, or the lunch macro rather. Look at this. 11:30 a.m. This down close candle over here. What happens next? Trade up into these relative equal highs. So this is our retracement, and note how minor this retracement is. So that is showing weakness as well. So a large range day like this can be anticipated and actually easily traded, because it's a low resistance liquidity run, and yeah, it gives you a lot of freedom and a lot of profits if you manage to do it correctly. So high of the regular trading hours created 30 minutes past 9:30, and the low is created 5 minutes past 3:30. So low of day created in the last hour of trading, high of day created in the first hour of trading. And yeah, we just had a beautiful day and actually a beautiful week of price action if you were on the right side. Oops. Okay. So traders, I want to leave it for now. I want to thank you for your attention if you made it to the final part or the last minutes of this trading episode. this beautiful market review of week 13. Tomorrow on Sunday, I'll be back with a market game plan. If you don't want to lose money, or if you do want to make money, then you are on the right place here. And yeah, let me help you, and yeah, let's grow together, and let's see what the rest of the year will bring. Have a very, very nice weekend and an even better trading week ahead. See ya.